you.
All right. Excellent. What a turnout. You know, a few years ago, there'd be probably a third of the amount of people here, and most of you would be in hoodies. And I see a lot of jackets out there today. So the things have changed a bit. Maybe you hoodie folks have changed to sport coats, and they're hiding underneath. I don't know. But we've got a great panel here. We've got some very early investors, some very successful investors in other fields that have taken the time and took the time early to look into this, saw what other people didn't see, and now people are looking back and going, wow, that was well done. So we have an opportunity to find out what these guys saw way back when in 2013, I guess, or maybe earlier. So we will start with kind of that aha moment, and we'll let the conversation flow from there, and I think we have some interesting stuff for you. So you have the introductions of the two. You know who everybody is. Let me start with you, Mike. Tell me about your aha moment. You're a global macro manager. You're trading Japanese yen. You see this little digital currency thing and go, I want to change my career and move into this whole thing. Is that right?
Well, it wasn't so easy. You know, I was working at Fortress. I was running a macro fund, and my partner, actually, who ran a distressed debt business, the furthest thing from speculative business, he had moved to San Francisco, and he met Wences Casares. I don't know if you guys know Wences. He runs a company called Zappo. But in a lot of ways, he's patient zero for a lot of people that got involved. And he was so enthusiastic about Bitcoin that he convinced my Luddite partner, Pete Brigger, and it's unfair to call him a Luddite, but he really, you know, bought dimes for nickels. He was a distressed debt investor to look at it. And Pete did what he always did on something that was speculative. He called me up and he said, hey, look at this. And so I quickly looked at Bitcoin from a cursory perspective and thought, you know what, it's trading about 90 bucks. There are a lot of libertarians out there in the world. There's a lot of anarchists and anti-government people, and the Chinese are buying. And that alone got me to think this is a perfect speculative asset. And so we bought some. And like most things, when you buy something that starts going up and you start making money, you start digging in a little deeper. And as we started digging in, we thought, you know, this could actually be real. And, you know, so then we went from owning Bitcoin to investing in the ecosystem. We invested in a lot of exchanges. And the big debate, you know, should you own Bitcoin or should you own the infrastructure around it? And I realized I wasn't smart enough to know which one, so we kind of did both. And that's how I got started.
It's interesting that you talk about how you know, an investment goes your way and you start to dig in. Because my personal story is the exact opposite. I bought it in 2013 thinking this was a bubble and it would never work, but it was my bubble, man, and I was going to make some money off of this. And after buying it at 700 and it going to 1200 and then dropping to 300 after China banned the exchanges for the first time, I had made every mistake that I tell traders not to make. I had turned a trade into an investment. I hadn't done any research, and losing money motivated me to kind of look into it. And then that's when I went, oh, wait a second. This is going to change everything about my business. It's going to change how I do business, and I need to know everything about it. I chose the token route like Mike just because that's my background. What I think is interesting, Glenn, is your background is building companies and speaking with operators. So tell us about how you got into this industry, why you got into it, and why you look at it from a different perspective than just buying tokens. You look at it more buying the infrastructure like Mike was talking about.
Sure. So I would say that I bought Bitcoin only as a last resort. And I'll explain to you why that is, but I'll go through a bunch of big topics very quickly. We can drill into any of them later on. I've spent my career investing in and building companies. I'm very interested in financial services. Spent a lot of time investing over the years in technology around exchanges. We've taken the cost of trading from down to about 2 to 2.5% of what it was when we started. I've always looked at payments as a huge pool of profitability that's a massive amount of legacy profitability that can be taken away by people who do it right. Trying to find the path toward a much more efficient payments modality. Found Bitcoin as one of the technologies that I think could do it. Reminded me a lot of the technologies that created what we now call the internet that I started investing in 20 years ago. looked to try to find ways to invest in it, made an investment in the digital currency group, which is part of this, which this organization's subsidiary. Then began to invest across the landscape, looked at the miners. I invested in payments companies, remittance companies, all these things across the landscape. Looked at the miners, couldn't figure out how to make a smart investment in the miners because they reminded me a lot of the silicon companies in the 80s and 90s, capital intensive, operating intensive, couldn't figure out who was going to win. And then it struck a lot of political risk because they're oftentimes in countries where rights of contract and regulation, all this stuff is impenetrable. And then it struck me that the miners got paid with Bitcoin. And the successful miners had the most Bitcoin at the end of the day. So I figured if I wanted to be exposed to mining, why not just go directly and buy the Bitcoin? And then I looked, and then the digital currency group had launched basically an ETF that held Bitcoin. And so I took the amount that I'd allocated in my portfolio to mining and just bought Bitcoin with it.
That's as good a way as any, and that's done well. So we had a little discussion backstage that I'd love to share here about, and this goes right to it, is that would the value of the companies that are building infrastructure in this industry, would they be valued where they are today if Bitcoin hadn't run up?
No. That's a pretty simple answer.
Okay.
I mean, all of these, each coin really is its own ecosystem, and there are these viral networks that you try to create. And so if the ecosystem doesn't work, that the companies servicing those ecosystems don't work either. And so it's hard to find a company where you would have made more money investing in the company than you would have just in Ethereum if it's in the Ethereum ecosystem or Bitcoin in the Bitcoin ecosystem. That might not always be the case, but it certainly feels like it's going to be the case for a while.
So again, I come at this from the point of view that I'm quite sure that Mike is right, so I'm not disputing what he just said, but I come at it from the point of view of what the companies are going to do with these securities, with these assets. I've bought across the digital asset holdings, digital currency groups, ETFs, so I also have Ethereum Classic, which I think is better for smart contracts, Zcash, which has more security and identity management, privacy associated with it. Because I always come at this from the point of view is what's the use case for the asset? In other words, I think that whenever you start new technologies, you have to use metaphors to allow people to understand them because they can't otherwise think well about things that don't exist. So when we started email, we had this, the metaphor was the envelope. When's the last time you actually used an envelope, but you click on one every day because you still have that metaphor there of mail, right?
Right.
So the metaphor of gold, I think, is a failed metaphor, a misleading metaphor. I think of it more like industrial metal like copper or platinum, where different metals have different kind of uses and they grow in value to the extent that demand for them grows. Mm-hmm. And so I have invested across the asset classes in currencies that I think are going to have important use cases over time. That's kind of point one. And point two is the way I understand the math behind the digital currencies is they grow in value as their use grows. And a lot of the speculation today is about uses of these things in the future and how you can buy ahead of that. And so I'm much more interested in companies' applications of the technology for ledgers, payments, remittances, smart contracts, all the different kind of things we can do. And I think without that underlying use case or overarching use case, the underlying currencies will have less value.
So it's we have a symbiotic relationship. We have to have both of them. One doesn't exist with the other. So Mike, when you hear people say, I like blockchain but not Bitcoin, or I like blockchain and not the tokens, when I hear that, it seems to me that we have to have both of these. I've always said it's like saying I like email but not that little @ sign there. I mean, it's the thing that makes it work, right? So how do you feel when somebody says I like blockchain but not Bitcoin? What do you say?
Well, there are lots of different blockchains. And so, Bitcoin is vying to be decentralized money or decentralized store of wealth. It's got some competitors. I think Bitcoin wins out in the end. But I think in each use case, when we use that expression, right, there are a bunch of different tokens trying to become that community. And I don't think you're going to have lots of winners in each use case, but you're going to have lots of different blockchains. You're going to have one for decentralized cloud computing. Right now, there's one company out there. I'm sure there'll be 2 or 3 that vie to become the decentralized cloud computer. You'll have offshore gambling, prediction markets, And so each of these communities that try to get built are going to fight, like in any other market, with other people in that space. But they're going to be, to some degree, independent blockchains. Now, they might all plug into one kind of industrial, shared, decentralized computer. That could be Ethereum, it could be EOS or Hashcraft or some of these new guys coming after it. But I don't think everything can win. Right now it feels that way because money is rushing into the system, and people have not done a whole lot of homework are getting excited by this. And I mean, even I posted a comment, I made a witty comment that Litecoin was the poor man's Bitcoin. And it was interesting on Twitter how many people said, wait a minute, it's a cheaper price. Just because I don't have as much money as you do. And I was like, oh no, that wasn't what I meant at all. What I meant was, it doesn't add enough kind of new stuff to replace Bitcoin. And so I don't think in the long run, Litecoin will survive as one of the decentralized store wealth platforms. It doesn't matter what the actual price is, because market cap really drives this whole viral network, right? The larger the market cap you get, the more people are participating. More people are participating. It's like an army of Amway salesmen trying to create a community. And so I do think first mover advantage is a big deal.
Okay. So we have these, we talked a little bit about the use cases. Glenn, you're investing in the companies that are building on these use cases. You've invested in Zcash, you've invested in Ethereum Classic. Do you see it like Mike sees it, where ultimately we kind of have an internet of blockchains, and the ecosystem expands, and then the companies that you're invested in can build on any of those? Or are your companies very siloed and saying, you know what, I'm building for Zcash, or I'm building smart contracts on Ethereum Classic?
So the way I think about it is, my view is you have to know your destination in order to chart a course to get there, right? And so my destination, which we may never get to, but I think is a good way to think about it, is how can we arrive at a place where we move anything of value around the world at the speed of light at almost no cost? Mm-hmm. The way we move information today, emails. If you think about it, we've enabled the internet first to do messages, then to do emails, then to do websites, then to do voice. We're doing video now, and I think the next thing is value. Okay. And so finding your way there that's the destination I want to get to. If you start from today and look forward to that, the notion of a private blockchain is sort of silly, right? It's kind of like the intranet. Right. Of old. Right. And there was people remember Novell. Everybody remember Novell? Who was the CEO of Novell at the end? Nobody remembers that. Eric Schmidt. And how did Eric Schmidt really make his money? He went to Google, right? Right. And the private blockchains are an interesting enterprise technology that will reduce costs for companies that are very conservative, which is why a lot of the companies whose business models are threatened by the public global public connected blockchains are really into blockchain. The 68-year-old director, can say we have a blockchain strategy. We're on the cutting edge, right? Yes. And they're really not. That's kind of, I think, point one. Point two is if you think about getting to the place where I'd like to go, you see you have the blockchain technology. You have the Bitcoin as a currency unit. By the way, there are other alternatives that we talked about. And then you've got what I refer to as the Bitcoin protocol, which is the means by which all these blockchains get connected, and the Bitcoins gets moved around the world, and we can move toward this vision of attacking this massive pool of legacy profitability in the payment system. So in my view, the most important piece of this technology is the Bitcoin protocol. Right. Just like SMTP, TCP/IP, HTTP, VoIP, and all the things that we're doing now with video were the key enabling factors for what we now call the internet.
So that's all right. So now that's very interesting, because this is a different type of industry, and Chris was up here talking earlier about how the valuation of these tokens derive their value a little differently than equities do. And so it's interesting that you mentioned we have this protocol. And I've always thought of the protocol as essentially just a software program that you run that allows you to disintermediate financial services. That to me is what Bitcoin is, or any of these coins. And the incentive mechanism to get somebody to run that software is that token. So I guess what I'm curious, and what I'm always asked about, is how do you value, right? What is the value of this disintermediation? And is the value, should we compare the value to an equity, Mike? Or is this more like a currency where it's going to grab whatever value it needs to grab?
First of all, I don't think many of these are currencies because you need real stability to have a currency. When you look back on the history of currencies, there are very few currencies that ever succeeded that have a finite supply. So even Bitcoin, which I think is going to win the battle for store of value, won't be a real currency because it's too easy to manipulate when it's a fixed supply. It's too easy to squeeze. And volatility stays too high. That doesn't mean it's not important. Listen, none of us use gold to buy or sell shoes or jackets or beer, yet gold's got an $8 trillion market cap. And I think Bitcoin could certainly go there and win that. And so when you think about that as store of value, when I think about most of the other coins, like I talk about there's going to be a decentralized ride-sharing coin. I'm sure there already is one that I haven't invested in. But what does Uber do? Uber matches drivers and riders. It gives you a reputational score on the driver and a reputational score on the rider, and it provides a billing service. That's it. It's a perfect company industry to be decentralized, right? The blockchain soon enough will be able to give you a really good reputational score on both sides, and I'm sure some coders out there in the audience could figure out a nice bill paying system. And so if you think about how a token would work with Uber, right? So someone does a token launch, an ICO raises $30 million to build the technology. We all buy tokens. And you start using tokens to take, the decentralized Ubers. And first it's a half a token, and then all of a sudden as more people start using them, the value of the tokens goes up. The price deflates like crazy, because in reality, you're not going to spend more in dollar terms than you would on a decentralized taxi than you would on a normal taxi. And so as the economy grows, as more and more people use these tokens, and why are they going to use them? Well, hey, the drivers are owners, the users are owners, everyone's an owner all of a sudden. It's the whole Amway story again, right? That you start using these Uber tokens to take now they're instantly converted into the dollar equivalent and back, but all of a sudden the value of the tokens all go up, and they actually equal the GDP of the total ride sharing. And so it's not the profitability, it's the total economy of it. And interestingly enough, because profitability, when we think of equities, it's usually some multiple on profits, they might end up being close in actual dollar terms. But when I look at valuing, let's say, an Uber token, it would be, what's the total GDP of taxis and ride sharing total? What's the total economic growth or economic input there? And then what's the probability of this group of people, the CEO, the team, and the community actually displacing it? And that's the valuation framework.
So it's interesting. So as a global macro investor, we see a lot of global macro managers get into this space. They seem to be some of the first movers in it. Is it easier for you, because you traded currencies, to wrap your head around this idea of a valuation for a token than maybe a traditional equity investor who's doing discounted cash flows all day long?
I think because we're in such an early stage that this is wildly speculative markets, right? There's not one of these blockchains that are even close to nearly fast enough to have any of these companies actually successfully run their businesses on. So we're all making a bet that in Ethereum that, quadratic sharding or all these, possible fixes that are coming are actually going to work, and that the system is going to really speed up, and it's going to be able to handle all the volume that would justify a price like this. We're having this big debate in Bitcoin. How do you speed up the blockchain? And so because it's so speculative, it kind of falls into the sweet spot of speculators. Macro guys are generally intuitive. They're trying to predict the future. They're trying to make bets on less information than real fundamental investors are.
And we're all kind of volatility junkies a little bit too.
Yeah.
At least I am. But it's interesting what Mike brought up, Glenn, because he was talking about decentralized Uber. And you're investing presumably in the equity of these companies. The decentralized autonomous organization, or DAO, has a kind of a negative connotation because one was hacked. But I'm curious, if you look at your investments, Are your equity investments at risk of being decentralized and being tokenized and put into a decentralized organization?
Well, let me answer that question a slightly different way, if I can, for a minute. There's been a discussion about kind of bubbles and frauds that have percolated around our universe, right?
Yes.
And I think it's very, very important to make a distinction between a bubble and a fraud, right? If you go back and look at 1999, 2000, the internet stocks were in a bubble. We look back on it, and that's pretty obvious in retrospect.
Yep.
But if you had bought and held the very best internet companies during that time period, you made a lot of money. You would have still made a lot. You would have made a lot of money from where we sit today. And it's very clear that the internet was not a fraud.
Right.
Okay?
Right.
You go back and look at the mortgages in 2007. That was both a bubble and a fraud. Right? And some of the people who have been criticizing Bitcoin, I think, bring that frame of reference for their personal experience, as opposed to kind of really thinking through kind of the understanding and thinking through the use cases for Bitcoin. So it's very clear to me that Bitcoin is not a fraud. It's very clear to me that if we get this right, it's also Mike made a very important point. We are in very, very early innings in the development of this technology. One of the most important is the speed. You can't have a payments network that operates at 10-minute increments.
Right.
Right? It just doesn't work. Right? So and that's one of the reasons why Bitcoin could turn out to be Betamax, and something else could turn out to be VHS. That's a better use case for what we're trying to get this done. What we're trying to get done here. You see what I mean?
Yeah.
So we're very, very early days. We don't know exactly who's going to be the winners. But my personal view is if you pick the best companies and ride them through the ups and downs of these valuations and market things and use cases and who's up and who's down kind of stuff. But you pick the very best companies and stick with them for a very long period of time. It'll be like having bought the best internet companies in their early days and held onto them through to today.
Okay, interesting. So what Glenn did there, for the older folks in the audience like me, is he subtweeted the entire mortgage industry on that. So he called everybody out.
Not the entire mortgage industry.
Well, some people that were involved in...
Mostly the unregulated parts of it. The regulated parts of
But to be fair, this is a bubble, and there's a lot of fraud mixed in. You know, whenever there's such a huge tailwind behind an industry, there are fly-by-nighters, there are people that are in for the quick buck. I mean, we look at tons of projects, and some that get funded, and they literally look like Ponzi's. And so, it's a little bit buyer beware and do your homework, but there's a lot of froth and fraud in anything that's as exciting as this.
But I want to be very clear. I did not say that this is a bubble. I didn't say that, and I didn't mean to imply that. Because I don't know I don't think in terms of those kind of valuations. Those sort of things I would leave to the people who sat on trading desks all their lives. Because I stayed with the internet all the way through the 99, 2000 to today thing.
Right.
And I had lots of ups and downs along the way, but ended up at the end of time, like that chart that was shown earlier, way up.
So that's
saying, where I feel we are in this.
If somebody wants to define it as a bubble, you're saying that along the way, this is a bubble that's going to expand with potentially crashes in between.
I'm saying I just don't think about it in those terms. I think about it in terms of the companies that I'm investing in and building value in those companies for the long term.
Did you think about the internet as a bubble in '99? Did you have those thoughts?
No, I thought about what companies I wanted to invest in that I thought were really good companies, and stayed with them through the ups and downs of the cycle.
So I think this is going to become the biggest bubble of our lifetimes by a long shot, mostly because it's so global.
I want the record to show I didn't say that.
Mostly because it's so global, right? You need a phone to participate. And so in Taiwan and Japan and China, in India, in Africa, there's my buddy from CNBC Africa here today. All over the world, people are participating in this. And remember, at its core, the decentralized revolution is a reaction to a breakdown in trust. It started, after 2008 when the mortgage crises and the whole financial crisis almost took the world down. And it's a reaction to the sense that we can't trust some banks, some governments, some institutions. We don't want to trust them. The world wasn't working for a lot of people. In a lot of ways, it's a parallel to the rise of Trump, right? That Trump got elected because the economy wasn't working for 50, 60% of America. this decentralized revolution has a very similar DNA. I think a far more positive approach than Trumpism. But it's a reaction to the fact that people didn't trust institutions. And so that's such a powerful message that it's easy to suck people into it. Because I think at the core, the guys that are building Ethereum, the guys that are building Bitcoin, really do believe in this mission of decentralized world. Can we restack how the system is set up so it works better for everybody? And so that's an easy message to sell. Remember, bubbles happen around ideas that actually are right, that change the world. The railroad bubble happened because railroads came and it changed the world. The internet bubble happened because, oh my goodness, we use the internet so much more than we ever dreamed of, right? It's ubiquitous in our lives today. The internet changed the world. The decentralized revolution is going to change the world. And because of that, prices are going to go to such further levels that are tethered to reality than we can expect. There will be wild crashes in it because you're going to get to levels that are so far ahead of where the technology is going to come. And then it's going to crash down, and you're going to the good companies are going to keep chugging along.
Just keep going. Get up every morning and go to work.
And build the company. Come out. But, it makes investing really, really exciting but difficult. Just in this last week, there were so many signals that I felt, phone calls I'm getting from, my son's friend's mother, who's
she called you too?
Whose 88-year-old whose 88-year-old mother wanted to put her $200,000 of life savings into crypto because she wanted to leave her grandkids more money than the $200,000 she had saved over her entire life. And I was like, I'm not sure that's such a great idea. Maybe 5%, So there's lots of signs that even right now that this 10,000 could be just a little blow off, or that this is December 99 hitting a March, and we then have a correction back down. I don't think, like I said, I think we're in the second or third inning, but we have this frothiness, and you're going to have to learn as investors to either just sit through it, like Glenn's going to do, or to try to kind of trade the excitement and the depression. The other thing that's interesting about Bitcoin specifically, but most of these, tokens, is that they're fixed supply, or there's a supply with a built-in inflation rate, and so there's no supply response. If the price of oil goes up to 150, we start drilling all over the world. We start investing in solar. Mm-hmm. We do all kinds of things to bring on new supply. You don't have it in Bitcoin, and so when price goes up, there's no one to sell. Other than people that already own it. And so prices get exaggerated on the way up and exaggerated on the way down. And that's just going to be part of the ecosystem you'll live in.
I think that's a perfect place to end it. Yeah. Great perspectives from both sides. Thank you guys
Thank you.
very much. And thank you to the audience. Great job. Thank you.